First up, the government of Ghana is not likely to pay the over 4 billion cedi 5-year bond maturing today. This is because it has already been included in the second amended and restated exchange memorandum of the domestic debt exchange program. However, it is unclear whether the government will honor the interest payment of the debt instrument. Ideally, the government would have to roll over the instrument, but market conditions make it unlikely to do so. We'll get some perspective from Professor Williams of the Andrews University in the U.S. in a bit. First, though, this report capturing what is in the memo.
Joy Business is learning that unlike in the past, this document or memorandum of understanding, its draft paper was circulated among all the critical stakeholders before it was published. This was to ensure that all the concerns from these bondholders are captured in this revised debt exchange program to address all the issues so government doesn't suffer any backlash when this document is published. This is because government is racing against time to get all these stakeholders to sign up to this deal by tomorrow. It is not clear whether this will happen, as some of the interest groups, like the pensioners, have hinted that they will pick it at the Ministry of Finance today for their inclusion in this debt exchange program, as they wanted to be excluded. The amended debt exchange program identifies 3 categories of bondholders, one which includes collective investment schemes and persons below 59 years ending January 2023. The second category of holders, that is those that are over 59 years. The third category are not included in the first and the second, but a separate grouping on its own. Based on this revised memorandum of understanding, it looks like the banks will be getting more than the 5% that was earlier announced by the Finance Ministry in terms of coupon payment.
Associate Professor at the Andrews University, Professor Williams, joins us on Zoom to discuss this. So based on this new memo, we understand government is unlikely to pay the over 4 billion cedi 5-year bond, which is maturing today. However, it is unclear whether the government will honor the interest payment of the debt instrument. What's your thinking about this?
Good afternoon, Daryl, for calling me. So, Daryl, if you remember, government had already planned, and sometime in December 2022 had already included these bonds into their strategy, especially when it came out with the zero interest payment for 2023 until the government amended their position. It might be said that also that government has mentioned that this program, domestic debt program, is a voluntary one for individual bondholders. This gives an indication that government will be in a position to strategize to make the payment. But what I'm foreseeing is that the payment will not happen on the settlement date as has been planned. If you look at the notice given by government intends to accrue the interest and then pay it at a later date. So bond that will be due, that is due tomorrow, which is due date, we also have a settlement date. So the settlement date, this is where government is going to plan, probably to make sure that they have cash flow to meet the needs or this requirement. We must also know that government made some provisions in the budget for paying interest. And if government is able to raise some revenues within the first quarter, I'm sure government will be able to settle it. If not, government option is to go to the central bank to give some overdraft to allow government to pay this initial bonds that are due. We should know that if there are concessions for government, government meeting IMF requirement will happen at the end of the year. That is a zero deficit financing. So in between time from January to December, government may require Bank of Ghana to come in to give them a bailout. So I'm foreseeing that this is what is going to happen. That government will pay all right, but the settlement date is not going to be as stated on the terms.
I know that there are lots of considerations the government has to make at this point, but was this the best option seeing that bondholders are very skeptical about signing up for the deal?
I mean, for government to be able to get the bondholders to sign up about the deal, they must exhibit some trust by making sure that they commit to their words. Remember, both the president and the finance minister, they have mentioned that government will pay bonds when they are due, especially the first two bonds due in February. For individual bondholders to hold government to its words that after 5 years, if you sign on to the bonds, you will be in a position to pay us. Government must make sure that they're able to pay this one now, have that agreement to bring the confidence back to the individual bondholders that yes, we should trust government that government will pay. If government fails to pay this one, to send a bad signal to the market that even the 5-year strategy put on the table now is not certain. Government may also default. Yeah. These are some of the challenges to government, and it's incumbent on government that they find a proper settlement date, use all the available revenue they have generated to be able to pay these bonds. The other option is that if government will want to also talk to the individual bondholders to convert some of their bonds due into treasury bill transactions, that is the third option that government will have now, because the treasury bill rate for 91 days and 182 days are something that's very lucrative now. So if government is not able to pay the interest now and accruing it, and they have a discussion to roll over these bonds and convert them into treasury bill payments, that will give some assurance to the individual bondholders.
Well, my last question. Tomorrow is deadline day for bondholders to sign onto the program. But like I indicated, news like this, I don't think would get the buy-in of bondholders with it.
I mean, it's tough seeing the position taken by the pensioners and the individual bondholders. It's very tough, but their holdings in the portfolio are no more than 30% of the total bond portfolio. Those very significant. The good thing is that the corporate entities have agreed to sign on. The individual bondholders, which probably governments still have to be engaging them, and then when government goes to meet IMF, can make a case that engagement with individual bondholders are still ongoing. We believe that to be able to get something out of them, and this will be a good sign for government to be able to get the funding from IMF. But if government fails to, as I've mentioned, fails to pay now, the one which is due, to send a very bad signal to the individual bond.
Well, as far as the president is concerned, the debt action program is a done deal. He's quoted to have said that today. And so let's see how it turns out tomorrow. Thank you so much, Professor Williams-Pipra of the Andrews University in the U.S. Meantime, pensioners have been picketing the Ministry of Finance, demanding exemption from the debt action program. Take a listen to what they have been telling JoyNews' James Aveji.
I'm joining my colleagues to say that you should exempt us from this domestic bond exchange program, because we have paid our due to society and we bought the bonds on trust. Most of us from the banks were convinced that they are safe. They use the word risk-free, that the bonds are risk-free. So I believed everything, and I invested some of my retirement benefits in it with the hope that every time I get a coupon, it will support my medical bills. Because I tell you, you can just sleep and wake up one day and you have an ache somewhere, a pain somewhere. And so it's just to keep me going and make sure that I live a life of dignity after my 33 years of hard work. So you can't just wake up one day without negotiation, without calling us and explaining anything, and then we hear an announcement after you have said that independent bondholders are exempt. Then just before Christmas, you said they are part of it. We are not just anyone. We are the senior citizens of this nation. We need that respect. We need to be treated with dignity, respect. In fact, we want our money. We don't want to be part of this program. If he can't even pay the coupons, he should give everybody their money. Let us live our lives. Do you understand me? Because I don't have anyone to take care of me.
The last communication from the Ministry of Finance is that you persons who are over 59 years would be given 15% coupon rate and 5 years maturity
You
rate.
can't take my money and decide how you are going to give it back to me. It's my money. We are not going to be part of this. There are several other Ghanaians. They should find a better way of implementing this domestic debt thing. You can't just zero in on bondholders and say they are the ones paying the debt of Ghana. Why? Especially pensioners. Why? What have you done? Everybody abroad I know in high position, I told this, they thought it was a big joke. Like, how could they do that? It's a disgrace. They better revisit this issue and handle it well. If every Ghanaian is going to contribute 10 cedis, 20 cedis, or 100 cedis, I don't mind. But you can't hoodwink our bonds. After several years of hard work, people may have spent their money doing something, but I decided to invest it because the bank convinced me that it was safe. If I knew this was going to happen, I would have invested. Please. Okay.
Right. So that is one of our mothers here. There's another mother seated by her, all cladded in red. What exactly do you expect the Ministry of Finance to be telling you this morning as you are here?
That we are totally exempted from this animal called domestic debt exchange program. I invested my money because that is what I'm going to live on. I don't have anybody. As I sit, I'm not well, but I have to come and sit here, breathless, trying to breathe. And you've taken my money. I mean, this is unacceptable. As my sister said, they did not even engage as my money that you have even used to do your foolishness. And you want us to pay. You don't want to sacrifice. And you don't get anybody else but pensioners. Are you human? Are you normal? What is it? Please tell them they should exempt us totally. We are the last people they should approach. We respect ourselves, so that the words that will come out from our mouths will not be nice.
How long do you intend to stay here?
Every day. We will come here and sit here every day till they tell us something.
JoyNews reporter James Aveji joins us with news on the outcome of that engagement at the Finance Ministry. I know they got a hearing from the Finance Minister. James, did the pensioners get what they want? Unmute, James.
Okay, Daryl, if you can hear me, I'm saying that the pensioners did not get exactly what they want from the Finance Minister, because as you heard them earlier, what they need right now is a total exemption from the domestic exchange program. But from the Finance Minister, he explains that from their initial assessment of all the bonds from the individual pension bond holders, they have come to the realization that on average, their rate, the rate of their coupon is some 18.5%. Now, instead of leaving their bonds to go down the drain at a 0%, they have decided, the Finance Ministry and government has decided to offer them 15% of that 18.5, which means that what they are struggling over now is 3.5%. That is what they are struggling over now. And so he appealed to them and treated them to accept the term as contained. It is contained in the last communique that came from the Finance Ministry, that they are offering them 15% coupon rate, which would mature over some 5 years. And so that is his explanation, appealing to them that it is essential to get them onto this engagement so that government can get the 80% it needed to land an IMF deal. And he, again, emphasized that failure to get the 80% would mean that we would not be able to get an IMF program as at March this year. Now, after his presentation, when we caught up with the pension bondholders, they have totally rejected the proposal from the Finance Minister. They are saying that it is total exemption or nothing else. The only indication, additional indication we get from them is that so when the petition ended, it ended a few minutes before the minister called them back to have an audience with them. And so most of these pension bondholders had left the finance ministry. And so their convener, Dr. Eduanani Entry, indicated that they would go back to meet the over 500 pension bondholders, relay the minister's information to them, and by close of day, they would come to a conclusion on whether they would accept the 15% coupon rate, 5% maturity, or they would reject it totally and continue to call for the total exemption, which will mean that from tomorrow, as they have planned, they will continue picketing at the finance ministry, dedicate 1 hour of every day to picket there until they are totally exempted.
Very well. Thanks so much, James Aveji, who is a reporter with JoyNews. I appreciate the update. Well, government recorded a 37.3% oversubscription of its treasury bills for the second week running, as the short-term securities market remained the only source of borrowing. Head of Trading at Republic Securities, Patrick Edem Agama, joins us on Zoom with some analysis. What's the rundown, Patrick, on last week's auction?
Well, on the money market, government raised a total of 1.95 against a target of 1.4 billion Ghana cedis, recording oversubscription about 37%. This was largely as a result of the excess liquidity through the coupons and the maturities that we saw last week. For the 91-day, it cleared at 35.74%, jumping by 3.1 basis points. But bids that were accepted stretched to as high as 35.92%. For the 182-day, it cleared at 35.8% and also jumping by 5.5 basis points. For the 91-day, it took about 80.4% of the total bids that were accepted against 19.6% for the 182-day.
All right. The observation, though, interest rates continue to remain high, though not surprising because it's coming on the back of an increase in the Bank of Ghana's policy rate to 28%. What are the implications?
Well, we expect the trend to continue, but if you look at even the basis point, the rise in these rates, there is some little resistance. It's still around the 35 range, and it's not getting into 36. So we expect it to be at that point for some time now. We also expect the real test to come in when government is targeting raising above 2 billion, like we are expecting for this week. The target is 2.7 billion. We want to see if the excess liquidity in the market is going to be channeled through to the 91-day and the 182-day bills.
All right, and let's do a quick update on the capital markets. What do we expect to happen this week based on what happened last week?
Well, there's still significant demand for stocks like MTN, Total, and Benzo Oil Palm. For last week, we saw Total being the sole gainer on the market, gaining about 5 pesos. So these three stocks, in terms of upward movement, are driving the market. But we also have other drivers driving the market down. We have Stanchart, Farmel, GCB, and Unilever. There is significant sell side for these particular stocks, and we expect that to be there for some time.
Head of Trading at Republic Securities there, Patrick Agama, joining us with that update. You're watching the marketplace. We want to do something on oil. The National Petroleum Authority says it will regulate prices of petroleum products under the Gold for Oil program. This will be done in the interim until the volumes increase significantly. The NPA in a statement said this will ensure that the prices of petroleum products under the Gold for Oil program reflect at the pumps to benefit consumers. We want to speak with Communications Manager of the National Petroleum Authority, Mohammed Abdul Kudus. Is he on? All right, thanks for your time, Mohammed. The NPA has, over the years, tried very hard not to interfere so much in the pricing of petroleum products. Why do you feel the need to regulate prices under this program?
Thank you very much, Chair. Regulation in this sense is not what it used to be before the amendment in 2015. We introducing this measure this time around because of the commingling that the BDCs and OMCs are going to be adopted. What it means is that they have two sources that they are picking their fuel from. One is under the G4O program, and then the other one is under the prevailing market price. So what it means is that the prices would have to be weighted so they can arrive at an average and be able to sell either at the XRF or at the Expo. So the regulation is not as though we are putting aside the acts or the petroleum pricing formula that was amended in 2015. That is not what we are doing at all. It's a peculiar circumstance that we found ourselves, and we need to adopt a particular measure that would allow us to arrive at a price that would get the intended benefit to trickle down to the consumer. And the marketers have agreed with us. They've had meetings with us, and we have an undertaking to ensure that this actually goes as planned.
Okay, so this is supposed to be in the interim. Your statement says until volumes increase significantly. So what happens after the volumes increase?
Okay, so when the supply increase as we are all expecting, and then we can identify OMCs who are selling only G4O products, then it makes the monitoring very easy. It makes the pricing very easy. And there might not be the need for us to want to have a mechanism in arriving at the price at all. But as we speak today, because the quantity brought in by BOST is relatively insignificant, it makes it difficult to go by the original pricing formula. Because like I said, the marketers are picking now the product from two different sources. One at a higher price, that is the prevailing market, and one relatively at a cheaper price under the G4O program. So there is the need for a certain understanding and coming up with a framework that allow a fair pricing, the marketers would get what they are expected, and the consumers would equally get what they are expected.
You also indicate that you're working with BOST to negotiate prices with international oil traders, and you also would have some oversight on how much the oil products will be sold to bulk distributors. How is that going? Yeah, so because of our presence and visibility on the tradings on the international market, we're able to advise BOST to the prices that they are buying their product. The ultimate objective of the program is to get commodities, a product at relatively cheaper prices. So we want to bring our expertise on board, help BOST to be able to acquire that. Then when the product is brought on board, it is supposed to be sold to the BDCs, so the BDCs can sell to the OMCs, then it trickles down to the retail outlets at the point where you and I can go and buy. So we play that role again in determining the ex-refinery price that the BDCs, after buying from BOST, will then have to be selling to the OMC. So that is going to be the role that we play in. It is not different from what we've actually been doing all this while. But because of a certain peculiarity in this particular program, that is why probably it is raising a certain eyebrow. But it is a normal role that we'll be playing all this while in determining XRF at the BDT level and then the XCOM at the OMC level. Okay, my last question, if you could do it in a minute. Can you confirm for us when the second consignment is coming in, and how significantly do we expect prices to go down? Precisely, I might not be able to tell when it is coming, but I know that the Lacan that they have, some are expected in February this month, some are expected in March next month. So that is what I know about it. Holding every other thing constant, and let's be mindful, the prices of the product on the international market can vary as and when they choose to do that. Okay. OPEC do not operate to our wishes. But holding everything constant, we're expecting that the Gold for Oil program would impact on the price at the pump so that it comes a little bit lower than we are buying it presently. We've got to go. Thank you so much for your time. I know you're out of town, and I appreciate that you could make time for us. That was Mohammed Abdul Kudus, Communication Manager of the MPA, speaking with us. And that's the marketplace, everyone. Thanks for watching. There is more news on our website, myjoyonline.com/business. We will be back same time tomorrow. Thanks for watching.